Good afternoon, everybody. It is Mark Coe for the 3rd of May, here to take a look at a dynamic that I think is kind of important for your trading. And I think regardless of whether you're short-term or longer-term in nature, it's a very good attribute that you want to possess when you deal in financial markets. And I'll tell you what it is. The ability to have conviction in your trade. So for everybody that can look a little bit different, and when I say conviction, what I'm essentially talking about is the ability to stick to your thesis, your idea. Um, a longer term trader, somebody that's building up very fundamental analysis and looking for longer term moves, is obviously going to just by nature sit in things longer. But when you look at traders that actually benefit and prosper year over year, one of the qualities that I think I've seen them all possess is their belief in what they really do. And I want to refer to this Aussie trade. Aussie has been really tight for the last several months, and we're starting to see it break lower. And I want to refer to my nightly analysis and just some of the commentary that's in this nightly analysis. So this is my currency analysis, and this is pretty much what Aussie has said for the last several weeks. Of course, I give my support and resistance zones as always. Those are for the day. But this is the commentary, and this is what it says. The pressure remains on the sell side as Aussie has failed to establish above 76.15. So let's look at that on a chart. What I was referencing was a couple weeks ago, this inability to come regain 76.15. And you can see on a longer term chart why 76.15 was meaningful. But Aussie's inability to regain that. And all Aussie really did was trade about 100 to 125 points for the better part of a few weeks. And that's why it's so slow and it's very range bound looking. But then I go on to say the longer term view of a weaker Aussie remains, right? It hasn't been shaken. The longer term view, and it's very important to understand when you're looking at longer term stuff, why the very short-term day-by-day swings may not be as meaningful, but do they do damage or do they fit in with your longer-term thesis? So I write that the longer-term view of a weaker Aussie remains, and it should start to see acceleration as long as the price fails to get back above this 75.50. Now this was key because this is the last several days. That's what the analysis has said. As long as we fail to get above that, right? As long as Aussie cannot get above this number, we should see downside acceleration. That was what was in my text last night, right here. Should start to see acceleration lower. And Aussie trades right up to the 75.50. The high of the day is 75.46. But then I go on to say above 75.50, and it's arguing for continuation. So let's see why this is important. Why, when you go look at multiple time frames and a little bit longer term analysis, like even just a daily, why do you see this develop? And, by all means, Aussie is probably not the currency that somebody that's looking for some good intraday swings is on, but you can't argue that Aussie is traded from 77 down below 74.5 and now is doing just what I said, which is accelerating lower. So think about the standpoint when you have this bias in place and you can come in and look to deal at top edges. Top edges. There's not really much of a top edge there, but break of bottom edge. This is where this was kind of more of the false break in terms of timing because we got 3 days of correction. But now on FOMC day, as you see in a dollar bid, this is the one you point to and you really see it getting hammered. So when I talk about conviction, when I talk about the idea of sticking with your trade to really make the money, right? A lot of people don't have any trouble getting stopped out and sometimes even getting stopped out with a high frequency. But it's the sticking with the winners, sticking with that idea that a lot of retail will tell me they have trouble with, right? They don't have enough conviction. One of the reasons they lack the conviction is because they're so short-term in nature, and I get it. If you're coming into a market, and let's look at Aussie specifically because that's what we're on, but if you're coming to a market like Aussie and you see any point, for example, any acceleration higher like this, how can you have conviction if all you're looking at is the momentum and you say, wow, this thing just went from 75.10 to 75.30. I don't have any conviction. It's going higher. It's going higher. Right? But where does it fail to take out? It cannot take out that 75.5, and by all means, it can't even take out top edge of yesterday's action. So when you're able to back up a little bit and look at what's really going on in the market, not what you want to see, and understand the longer term implications, you can trade from a much stronger place. I'll look at a market like dollar yen. Dollar yen is in the middle of a very wide, think about it. We traded from down around 100 up above 118 from the fall, right? So sitting around 112. I mean, you're kind of in the middle of this, the upper middle range of this wide section. But when you start to look at dollar yen and say, all right, from the recent lows, the 108 handle lows, what has dollar yen been able to do? What has it really been able to do? And here's your 108. I think there were 20s, or 13 was the low. From this stage of the game, right? From this. And this is more of a medium-term type of mindset where you're looking at it saying, this bid side is being held. Buyers are now winning battles at former top edges. There's conviction in the idea, even if it's medium term, meaning it doesn't have to be a 5-year outlook and say the dollar is going to be stronger against the yen, but it's understanding what's creating your conviction. And I think this, if you take this aspect of trading and say, whatever got me into the trade, as long as that's still in existence, I am going to stick with my trade. And that's a huge attribute to somebody's trading, that you understand, until this move shows me I'm wrong, I want to stay in the trade. And that's really the conviction aspect that I'm looking for, the ability to say, look, I get that dollar yen may be swinging lower, but until it starts to break a bottom edge, until sellers win a zone, it's not showing me anything different, right? Because that's all this is. So when you think about the gap higher in dollar yen, you think about the gap higher, even on the first night where dollar yen gaps higher, the 24th of April, it never challenged the close of the Friday prior. It made a new low, but all that really creates is kind of a bottom edge for you. And as dollar yen accelerates higher, all this is consolidation. To call this a sell side market, even in the short term, you'd have to look at it from the standpoint of saying sellers are controlling those bottom edges. And until they do, it's a buy side market. Hasn't changed yet. Hasn't accelerated 5 big figures in one day. It's taken a couple weeks, but the trend has been very persistent, and the ability to stick with it at those levels is ultimately what pays you as a trader. That's really the upside of what you're looking for. So anyway, Fed Day, June rate hike is now almost fully priced in. I think odds went above 90% today. We're seeing the dollar accelerate. Top side, you're seeing equity slightly lower, but not much of a reaction. We're still stuck in this tight range. So anyway, for the 3rd of May, I am Mark Coe, and I hope you guys have a wonderful day. I hope you're catching some of these levels. We'll talk to you soon. Cheers.